All right, well, welcome everybody. It's welcome to our this will be our 20th. It's our 20th Michigan Investor Group meeting. You can believe that. I think this is the first time I've seen Andy Mercer's face on one of these, so I guess you got to do 20 of them before you. But thank you everybody for joining us, and it's great to see you. Great to see your names and faces. And as we mentioned tonight, we're going to be talking about 10 or maybe more different ways to invest in Bitcoin. And our agenda tonight, just like usual, we're going to have about a 30-minute presentation, and then we'll have some time for group discussion and question and answer, and then just a very, very brief closing. We target 1 hour for our MIG meetings, so that's all I'm asking is, give us 1 hour of your time and see if we can learn some things and have a good discussion. Let me pull up our presentation here and we'll get started. So we'll share this. Can I get a thumbs up, somebody saying they see the presentation here? Okay. So tonight, as I mentioned, 10 or more different ways to invest in Bitcoin. And I just want to remind everybody that not that it's not important to think about why to consider this, but just tonight's focus is going to be all about the ways to invest in Bitcoin and how to invest in Bitcoin. And tonight's focus is not to talk about why. So just keep that in mind. And I'm happy later on if you want to ask me, for reasons why or whatever, but tonight we're going to focus on just learning a quick, broad brush of 10 or more ways to invest in this asset class. As some of you might recall, we have had 2 prior MIG meetings where the focus was to learn why you might want to consider investing in Bitcoin. And Bob Burnett, who's actually with us tonight, for at least for the first part of our meeting, led us through these discussions. And if you go to the MIG blog page, you can watch these videos, and that'll be a good place if you want to kind of just, kind of look again, some reasons why to consider. Okay, so let's go. Okay, we have a list here that we're going to dive into each one of these, for a couple minutes each. Some of them are very, very simple. Some of them are a little more involved, but we're going to talk about each of these 10 ways, and there might even be a couple extras that, came up later on in the development. There are some things to think about when you're trying to analyze the different ways to invest in Bitcoin. And this is not an all-exclusive list, and this is not, again, tonight's event is not a detailed discussion of anything. It's just a broad brush overview. But I think some factors to consider, are you looking to make a one-time investment, and do you want certainty in what you're buying? Or are you looking possibly to have some upside? Or are you okay with possibility for downside? Do you want to be passive or active? Do you want to be hands-on? Do you want to get your hands on some equipment? Do you want to get your hands on making some deals? Or do you want to be more passive? Are you going to invest with cash? Or are you going to invest maybe in an IRA or self-directed IRA? Do you want to directly hold the Bitcoin, in your possession? Do you want to hold the keys? Or are you okay with them being held somewhere else? Are you looking to try to buy Bitcoin at a discount? I know that might sound strange, but there are some methods that we'll talk about that you can conceivably be buying Bitcoin at a discount. Would you like to have depreciation as a factor in your efforts? How about tax treatment? Do you want to be taxed as capital gains, or do you want to be taxed as income, or do you want to try to avoid taxes? Well, I shouldn't say avoid. Well, I'm not big on disclaimers, so I guess if somebody hears that, they can come after me.
Tax
there are
avoidance
some investment deals
is legal.
where you need to be accredited. A lot of them you don't have to be accredited. That's another factor. And then you might want to consider whether you want to get paid out for your investment in Bitcoin, or if you want to get paid out in fiat. So these are just some of the factors to think about when we're talking about these different ways to invest in Bitcoin. All right, let's dive into it. Here's just some different ways. We're going to start off with some simple ones. I just labeled this one chunky. And basically all this means is every now and then you get the inkling and you feel like you want to buy some Bitcoin. And you open up an account and on an exchange and you just buy it. There's no rhyme or reason. You're buying it. You're buying it in lots whenever you feel like it. The second one about buying directly is something called dollar cost averaging. Some people like to, set up a daily, weekly, monthly, schedule, and they just buy the same fiat dollar amount of Bitcoin on that time schedule, just so that they can do something called dollar cost averaging. I happen to do this. I have a thing set up with River Financial. River Financial is a Bitcoin only exchange. And I have a monthly, there's 1 day a month. I think it's the 25th. Every day, 25th month, I have a certain amount of fiat that I trade in for Bitcoin. That's how I do it, dollar cost averaging. And then some people might want to, third way is time the market. You might think you can track the charts, or you can learn about like things like stock to flow analysis, or you look at those charts and the swings. I don't do any of that stuff, but some people like that, and so you might want to buy Bitcoin directly via the time to market method. When you are buying Bitcoin directly, this is just a list of some of the most well-known exchanges out there where you would go, sign up, open an account, and this is where you could purchase your Bitcoin directly, either chunky or dollar cost average or time to market, or just one time. I encourage you, even if you're just doing one time, just get in there. The fourth way to kind of get an overview of is buying Bitcoin via a private Bitcoin trust. And there's several of these. Probably the most well-known one is the Grayscale Bitcoin Trust, which I know quite a few people who, that's their method of investing in Bitcoin. And I'm not an expert on this avenue. But I do believe that this would be an avenue where you don't actually own the coins. You're kind of like investing in a vehicle that does buy coins, but you don't actually you don't have them. To the best of my knowledge, is one thing to keep in mind here. And I do believe some of these you need to be accredited and invest in the trusts. And some you don't.
What are you watching?
And I'm gonna see if I can.
It's a investing thing. I'm just gonna listen to headphones.
Just a second here. Let's see here.
We got some granddaughters that are making some noise.
All right. So I think we got that. Bob, Bob Burnett, did you want to say anything on the Bitcoin trust? It looked like you got something to share. You're on mute, Bob.
So what I'll say about this one is one of the factors to consider that David listed was, are you looking to get paid in Bitcoin, or are you looking to get paid in fiat? So this is a pure fiat play. So in other words, what you're doing is you're investing money into a fund, and that fund is going to, or the trust, it should somewhat track the ups and downs of Bitcoin's price relative to fiat. But this is a fiat play. So you're betting on Bitcoin, but the onboard and the exit are all fiat based. And so, it's kind of a one step removed from Bitcoin play, so to say.
Okay.
Not saying it's good or bad. Like you said, we're not here to do the whys, but it's a kind of a one step removed. It does have the advantage. It often is an easy entrance ramp for people, because things like the Grayscale GBTC can be purchased from just about any broker, and people that have, equity brokers or, those kind of accounts, or even a Schwab account or something like that, they can generally get them.
So this is a place to get exposure, but not to get your own coins.
Right.
Okay. Okay. Our fifth method listed is a Bitcoin exchange traded fund, or a Bitcoin ETF. And this is a little more relatively more recent endeavor. But these, I think only in the past couple months have the ETFs become available. And I believe this is similar. It's a similar kind of to the trust setup where, you know, you're kind of betting on the movements of Bitcoin. But this is a way to have an easier on ramp and get it through your broker. And I guess maybe just get your first awareness and exposure to the asset class.
And there's a massive amount of these outside the U.S. So if you have exposure to, you know, I think Canada's got 3, for instance, and there's several European-based ones. So to be clear, a true spot-based Bitcoin ETF hasn't been approved in the U.S. yet. There is a futures ETF, and then there are kind of these hybrid things that David's got listed here. You can buy a pure futures-based or spot-based one, like in Canada on the Canadian exchanges.
Okay. Yeah. Thanks, Bob. Thanks for that's great. Get that clarity. The sixth method I listed out here is, now we're kind of getting a little more, what's the word, esoteric, or a little more away from maybe what people are more familiar with. Now we're talking about looking for publicly traded stock companies that are listed on the NYSE or NASDAQ that happen to be holding Bitcoin on their balance sheet. And you might have heard of some of these in the news, like Michael Saylor. He's a very famous guy in the Bitcoin space. He's the founder and key shareholder of MicroStrategy. You know, I want to say they have several thousand Bitcoin on their balance sheet, and they don't want to have any. What's that, Bob?
Several 100,000. They almost have 200,000.
Oh, okay. So that company.
Wait. No. Well, I take it back. Sorry, you're more right. They have tens of thousands. They have about.
And so these are companies where, yeah, MicroStrategy provides, you know, computer solutions for big enterprises, but today their stock price is based on Bitcoin, which, you know, and Tesla decided they were going to keep a big, their cash reserves. They were going to convert a bunch of their cash reserves to Bitcoin. And the same with Square, and the next 3, Coinbase, Voyager, and Galaxy, they're actually in the cryptocurrency, you know, sphere, but they're publicly traded and they own Bitcoin on their balance sheet. So it's just, this is another way to get exposure to Bitcoin that maybe a lot of us don't necessarily think about. Then there's also another way, is there's actually some publicly traded companies that their business is mining Bitcoin. So these are companies where they're in the business of putting up facilities and buying Bitcoin mining hardware and setting it up and running it and mining Bitcoin. That's what they do. And so you can actually invest in the stock of these businesses where their whole business model and business is to mine Bitcoin. I personally have purchased a couple of shares of this company called Hut 8, and I believe this is after our March MIG meeting. I started trying to learn about some of these things, and you know, it was a good time to kind of get my first shares in Hut 8. So that has been kind of exciting to kind of experience that. The 8th method to talk about overview is to invest in a private Bitcoin mining fund. So just like sometimes here at MIG, we talk about investing in private real estate deals and, you know, private investments, you know, things you can't buy from a you know, like a registered investment advisor or just a regular Wall Street broker. You also can invest in private funds that the whole point is to raise money to build Bitcoin mining operations. And these are a couple that I'm aware of. There's you know, these are a couple of other private Bitcoin mining funds, and I'm starting to learn of more of these as, I guess, maybe as I as my awareness increases. And I think this was a spot where I was gonna see if Bob also wanted to share a little bit about private Bitcoin mining funds.
Yeah, I think first I'll make a general statement, which is if you do decide to go this route, dig deep into whatever it is you're going to deal with. Find out what the operating parameters are of what they're going to do. I would suggest investing in funds that have fairly narrow scope and fairly good governance around how far they can wander from whatever it is, like in this case, mining. So I think you'd want to invest in a company who is specifically investing in mining operations or in mining equipment, and also that if you're going to go this route, in my opinion, it only makes sense to go this route if the output is Bitcoin. That I've seen several of these that are still fiat centric. So, I mean, it's fine for the entry to be, let's say it was $100,000 minimum, fine for that to be fiat based, but you want them, in my opinion, if you're going to go this route, you want them to take your money, you want to invest in mining related activities, Bitcoin related activities, and you want them to give you Bitcoin back. And the second thing is have a discussion with whomever you are dealing with. If they are going to give you Bitcoin, understand the tax side of it, because I'll give you a very simple example. If a Bitcoin mining operation or fund generates 1 Bitcoin on, let's say, January 1, and the cost basis at the time they acquire it is $50,000, and they only do annual distributions, let's say. So the following year, they decide they're going to distribute to you, and Bitcoin's at 100,000. When they pass the Bitcoin to you, they are passing all that capital gain to you, when they do it. So like what I do, I'll tell you guys today, I have formed a new company. I will start a raise here before Christmas. It's called Red Horse Mining. It'll be specifically in a mining operation. And we'll also be buying some Bitcoin with the fund. That's all it will do. But as it generates Bitcoin, we will be paying out on a daily basis to the investors. And the reason we do that is that as we generate Bitcoin internally and we recognize revenue from the mining operation, we want to get at least the majority of the anticipated profit generated back to the investor immediately in the form of Bitcoin, so that we pass the Bitcoin to the investor with the same cost basis that will show up on the K1. And so I'm not here giving tax advice, but those are very important subtleties to make sure that whoever you're dealing with understands, and that they've set up the structure so that you don't get nailed at some point for some unexpected expense. Even worse can be make sure that they're doing regular distributions, or they've set up the fund in a way that they don't have to do that, and they're not passing those things to you. But for instance, if what you're investing is in an LLC, then the rules that I just talked about are paramount.
So this would have been good for me to host this meeting like a month ago, because my experience with investing in one of these with this group called Taosi Capital, my only experience is signing documents and wiring money. But I do a lot of things Bob talks about. Sounds like that's the setup. It's like a weekly distribution of the my pro rata share of the Bitcoin that are mined that week and that kind of thing. But you all get the benefit maybe of hearing about these things from somebody else before you try it. All right. So now we're going to talk about method number 9. This is also Bitcoin mining, but this is a method where you actually purchase the hardware, which some people call an ASIC, or some people call a miner or a rig, but it's hosted in a third-party location. And you guys saw that picture of your favorite MIG host in the email that came out, and that's one of the things that I've been able to have some experience with. But these are some of the companies that that offer you the opportunity to basically buy some equipment and have it titled in your name, and then they'll host it and operate it for you, and then based on different thresholds, they'll transfer you the Bitcoin or your net part of the Bitcoin that gets mined on your machines. And my friend Andrew Nissen is here with us tonight, and he is going to share with us his experience of doing this with Compass mining.
Hey, David.
Hey, buddy.
Okay, so to get started with Compass, what we did after consulting with my friend David, we decided we want to jump in on this, and went to compassmining.com, went to their homepage, found the link to where they're selling miners right there. And I was thinking about putting them in my outbuilding here or in another commercial building that we own. And we just decided we're going to have Compass host them for us. At least right now, that's the best option for us. Compass helped us walk through the process of getting in the mining pool. We use Luxor, and they pay us daily. We get the regular payouts, which is pretty cool. You can just sign on and see in our Trezor wallet where coin just automatically transfers in there, and we set that up too, and it's pretty fun. Stuff that we don't like, when you have just a handful of miners, if one of them goes down, that section of your mining capacity is 100% down. It's inoperable. So that's happened to us. Let's see, we had facility downtime too. So we bought 2. So both miners were functioning properly in Kentucky. Then the whole facility went down. So no payouts that time. They didn't charge us for power, but when they came back online, they've been doing good ever since. And they gave us a little refund too, which was good. But the last thing was that we didn't like. We had 3 more miners supposed to go in to action in South Carolina, and the facility, they had a permitting issue or something like that, and the facility, they're not allowed to operate. So I've had 3 miners, these brand new S19J 100 terahash, top of the line premium units, and they're sitting. And they're just sitting, and that kind of makes me sick, because the 2 that we bought that are working great, I bought them used. They were deployed immediately, and they're throwing off about 7% cash on cash or Bitcoin on Bitcoin. We bought them with Bitcoin, and we're getting paid in Bitcoin, so 7% cash on cash return per month. So that's pretty strong. So we're pretty happy. We're real estate investors, so we're not used to those kind of returns, but we do like the comparisons for depreciation, and we like that we're getting, whereas our real estate would appreciate, we're getting Bitcoin, which we think will continue to go up in value. So we like, for us, it's an easy transfer to doing that. So it's pretty exciting. We're very happy with it. We'll buy more. We want to buy as many more as we can. They sell them in groups sometimes for discounts, and we think it's pretty great. As an aside, I heard a podcast today with one of the guys from Riot, which you mentioned, one of the guys from Compass, and one of the guys from Marathon, and they said, we think mining today is like the internet in 1995. And one of the guys, I don't know which one, he said, I was born in the 90s, so he couldn't comment. But I think it's pretty exciting. So
you mean it's going to blow up in 1999?
Maybe so. Maybe so. Yeah, no guarantees in this stuff. That's for sure. I'm glad I didn't have a bunch of stuff in China because that certainly went offline, but our hash rate went way up when China went down. But
All right, Andrew, thank you very much for that overview. One of my cousins, he also purchased a couple of those used miners like Andrew did back in the summer, and they've had a good experience. But the Compass is having a little challenge getting some of the new facilities up and running. So that's a little overview of the third-party hosted miners, where you buy the miner and someone else hosts it for you. Our 10th.
One thing I'll add there is ask if you do decide to go that route. And Compass, by the way, is a very good company. I know the guys well. Just make sure you fully understand what rights you have. In other words, if you tell them, I want my miner, you know, what does it take for them to box it up and send it to you? That's probably the number one thing, you know, is that. And if you're making a larger investment, if you're buying one or two, I would say don't worry about it. But if you decide you're going to go 10, 20, whatever, you know, ask the people, you know, am I going into a facility that you're committing will operate for several years? Do you have the appropriate lease? Are you the owner of the building? Do you have an electricity contract that matches my the term in which I want to host with you? Because as Andrew said, in this business, disruption of service is the big deal, right? So, you know, 100 terahash unit right now is, you know, about $35 a day if you want to measure it in dollars, something like that. I'm not quite sure if that's what you're seeing, Andrew, but something like that is.
What is a terahash?
It's a measurement of the computing power of a given unit. So right now, 100 tera. You remember how like you do megahertz, like when you'd buy a CPU or something like that? Well, terahash in the Bitcoin world is a measurement of how powerful your unit is.
Okay.
So Bob, do you want to just since we're here, do you want to describe these units from Bitfury in terms of terahash and power? And
I don't remember which ones. Do you have the 100
terahash?
Yeah. So these units are called the Bitfury TARDIS Boost. My company is the U.S. distributor for these. We sold 2 to David. I don't remember when, and now time changes.
April. We bought them in April, and they got installed. And we installed them in June.
Okay. So you know, these units, as you're looking at them, what you'll see, you're looking through a grid kind of there, but on the inside are several mining cards. So in the case of the Bitfury unit, the ASIC actually stands for application specific integrated circuit, and each miner actually contains thousands of them. So it's actually kind of a misnomer. Sometimes people use the term ASIC to refer to the whole unit, but it's actually an incorrect thing. It's common, but it's incorrect. So you should really call it a miner or a mining server or a mining rig. Those would be the appropriate terminology. These units consume 6,300 watts of power each. They are, as I think David has discovered, they are space heaters galore, and you know, and energy hogs. So, you know, if you decide you want to operate at a personal level, be sure that where you're going to put them in can handle heat, you've got a reasonable electricity rate. Now, right now, you know, even people a unit like this could be installed pretty much anywhere in the country and would be profitable. I think most of you are in Michigan. You have so-so rates in Michigan at the residential level and decent ones at the industrial level. So you can do quite well with these. Not sure what else you'd like me to say
Oh,
about them.
that's okay, that's okay. Yeah, so number 10 was Bitcoin mining and, buying a machine and learning how to connect it and set it up in your own place, in your garage or basement or factory or,
Mother or what is she?
let me see here, how do I, all right, I'll mute everybody again. So yeah, so number 10 was kind of getting your own miner. And so that's what we did. Bob helped us get these two rigs, mining rigs. And, it was a learning curve. We had some help. We have Tony, Overform's IT manager, has some experience doing some home mining. And so he knew a little bit about the connectivity and getting them set up to the, getting them set up. And then the Overform team helped us, drop the electrical and put it in disconnect and that kind of stuff. And then our meter happens to be about a 6.5 kilowatt electricity cost on our meter here at Overform. So that's a pretty good rate compared to a lot of us would have at home. So those were the reasons that made this advantageous. But and there are some more learning curves. Like we put it in one of our kind of a white room we have here, kind of like a laboratory environment, and they totally overwhelmed the temperature control in that room. So for the first week they were in a pretty room with air conditioning and white walls, but they're just too hot for that room. So now they're just kind of out in a more of a grungy area where the noise and the heat aren't going to bother anything. But that was one learning curve, and then another learning curve. We have had a power supply kind of fail, and we kind of had to learn how to kind of diagnose that and get replacement. And then we had one other thing that caused some downtime. But even through all that, they've actually produced more Bitcoin than we thought they were going to produce. So they're a little bit ahead of pro forma for the first 5 months, and so that's pretty exciting. Anyway,
Probably should be approaching net break even at this point, right? You should be.
we are. We are. Yeah, so we've already gotten our money back for the hardware and electricity in less than a half a year.
Depending on what price of Bitcoin is.
True. That's true. That's true.
So
I thought I muted that guy.
No, you can't mute me.
so you're paying $800 a month in electricity.
About 600. About 600 is I'm trying to figure out who's talking here.
I don't know who's doing the dishes.
That's Sue.
Ah, geez. Okay. Yeah. So so this has been about $600 a month of electricity to run these. So that's one of the factors to be aware of when you're getting started. All right. So that was number 10. These are some of the manufacturers of Bitcoin mining rigs: Bitmain, MicroBT, Bitfury. I've learned that you really can't order these machines from the manufacturers. You kind of have to go through, a distributor program, or but these are the names you'd be learning and looking at if you considered it. We already went through, the experience we're having here. It's been very positive, and I just love just the hands-on nature of it and seeing it all work. And I still can't explain how it works, but it's neat. Okay, number 11. This is a bonus one. I mentioned my coworker Tony. Tony was not able to join us tonight, but he did give me a little education on this. And this is called something renting out hash power through a hash power marketplace. And I know that sounds really crazy. I'm going to read a little bit of a description here Tony sent me, but I'm just going to read it. I wanted to present an alternative way to get Bitcoin. While it may be a small scale solution, it is simple enough for most people to use, even home users. The requirement is a computer capable of mining or having access to multiple computers. Many of us have computers that are underutilized for much of their life. For example, Tony says, I have a gaming computer at home that does nothing while I'm at work. this computer is now connected to a marketplace selling its hashing power through a broker. 6 times a day, I receive a small Bitcoin payment for my hash to work. So basically, in summary, Tony has some computer hardware at home, and he went to nicehash.com and he followed their protocol. And now he's actually renting out the computing power of this computer. And well, I'm going to jump to the punchline here. I don't know how much electricity this uses for him, but the projection is that he's going to earn about 0.15 Bitcoin a year. Just by putting a computer that's sitting around the house to use. So I think that's pretty exciting. Somebody called it, one of my, Andrew here on the call, he said, it's kind of like Airbnb in your home if you're not using it for a while. I thought, so it's kind of like,
let me expand on this a little bit, David. So my company does a lot of this. And so what Tony's referring to is if you don't have one of these specialized rigs from Bitmain or Bitfury that are specific for Bitcoin, there are other coins that you can mine, for instance, Ethereum. And so if you have I'll be specific, if you have a high performance computer with a high performance graphics card, then this is a model that you can pursue. And when you're renting out the hash power, what you're doing is you're saying, hey, I'm going to let somebody else mine, for instance, Ethereum on my computer, but they're going to pay me in Bitcoin for that privilege. And because my company actually started out as an Ethereum mining company, and we've been doing this we're in our 5th year now, we have actually a large amount of hash power doing this because we have a lot of Ethereum mining equipment. We're not as interested in owning Ethereum as we are in owning Bitcoin, so we use this method heavily.
cool. Thank you, Bob. Thank you again for adding on to my to that general overview. Again, tonight's purpose is just to give everybody here a quick dash of awareness of all these different methods, and that was number 11. I remember this is a bonus one too. So,
So David,
yes, sir.
just a minute here on Bitcoin 101. I'm told there's a fixed number of Bitcoins, whatever that is.
Yes.
And yet we just talked about on 4 of these options, 5 of these options, mining Bitcoin.
Yes. So,
The conservation of mass theory tells me.
so John, here's what happens. Roughly every 4 years, every effort to mine, your production drops in half. So it's every 4 years, it gets twice as hard to mine. So it's still gonna, even though there's been 19 million or so Bitcoin mined so far out of the 21 million total, whatever it will be, every couple of years, it gets harder to mine. And so, and independent of how many computers come online and how much hash power comes online, the Bitcoin system is designed in such a way to make it more difficult to mine when there's more hash power.
So it has not reached rarity yet.
Well, the 21 million is fixed. We will reach that number in the year 2140. So the actual number is 18.9 million has been released into circulation. So it gets released into circulation through the miners. The inflation rate, if you want to call it that, is now about 1.5% annually. And as David said, in 2 years, that will get cut in half. So it's a known inflation rate coming into circulation with a known terminal point of 21 million. So it has an inflation rate, obviously much lower than fiat guaranteed and even lower than gold.
This sounds like a huge pyramid scheme. I mean, if now the people who are entering now produce at a lower amount for the same amount of energy, it's just, I don't know. I cannot get my head around this no matter how I tried. I'm here because I want to figure out what the hell is this? Why is this any different than Dutch tulip bulbs?
Yeah.
You know?
Well, I
Yeah.
think what you have to get to is, and it's a long discussion if you have seen the other talks given at MIG, but I'll tell you this, Bitcoin solves a couple fundamental things. One is it solved a technological problem called the double spend problem, which means we no longer need banks as a trusted third party in transactions. I can send you money without any third party involved, and in 10 minutes you can know with certainty and transaction finality that it occurred. It's a marvelous technological innovation. The second thing is, we just talked through the monetary policy of Bitcoin. It's known and transparent to everyone. It has been known and transparent to everyone for 13 years. It cannot be changed. So do you want your money controlled by a government who has no known monetary policy and has a couple 1,000-year history of either being corrupt or inept in the way that they manage the monetary policy? And finally, it is radically
Who says, by the
changing.
way, who says that there's 21 million?
It's built into the code, and it is managed by the miners and the nodes, which is more than we can get into today.
So
but
could
it is
somebody build in 30 million?
absolutely not. And
How,
you'll
why
have to-
not?
Well, it's more than we can do today, but I can tell you with 100% certainty that it is impossible for that 21 million to change.
Oh man, you just said something that there's no way with the way these guys can hack into things.
Okay. Well, you believe what you want to believe. I can only tell you that
impossible is
you can look at my technical credentials and decide whether or not I'm authorized to make such a claim.
So guys, let's stick with our program here, because it's really good questions, John, and I'm not trying to evade it, but tonight's
I get it.
purpose is just to give people a overview of different ways to invest if they want to invest. And I believe you should want to invest. That's why we're hosting it. But you obviously gotta get comfortable yourself. And so we kind of talked about Tony's experience with renting out hash power, and then the final one is kind of the inverse of that, is purchasing hash power. I'm not very familiar with this method, but I've heard about it a little bit. But you can kind of do the inverse of renting out your hardware. You can go rent or buy other people's hashing power and mine with it. And these are a couple of the vendors or sources to do that. So to recap, we talked about 12 different ways of investing in Bitcoin, and we kind of just outlined a few of the factors to try to learn about and think about, your personality and your interest and your time and your technical chops, where your funds are going to come from, et cetera, that might go into this. And that's basically the presentation for tonight. And now we have a little bit of time to, to hear people's questions or comments, and just kind of share for 15 minutes or so if people would like to. Let's first see if people have questions about these different methods. And then if there's time, then if you want, we can dive into a little more of the whys to pay attention if people want to talk about that too. So anybody have any questions about these different ways of investing in Bitcoin? All right. Anybody go ahead.
I had a question. Yeah, my name is Steven. I have bought Bitcoin with the components outlined in 1 through 3, actually, just over the course of the last couple years. Was just curious with those of you that are on the call, and just from your perspective or technical perspective on how to hold it. And I hold it in a couple different ways. cold storage, also in Coinbase Vault, for example, and also in some interest-bearing accounts like BlockFi and Celsius. And I spread it out in that way because I kind of, wanted to be diversified in that way and think there's pros and cons to all those components. And so was just wanting to pull from this group insights on where this group leans on that. I know there's multiple different schools of thought there, a lot of different ways to think about that, and was just wanting to open that up to getting people's perspectives on what they've found to be the safest and most secure, but also simplest. I'm in a family that knows very little about Bitcoin. And so I think about, if I were to pass away, for example, that Bitcoin is in cold storage and offline and in a safe and all the different components there, it's much different than if it's on Coinbase Vault, for example. So just curious what the group's thoughts are on that.
Okay, so Stephen, thank you for that question. Let me maybe do a higher level summary of what I think you're asking. And so basically, when you purchase Bitcoin, you either purchase it, you purchase it usually on an exchange, like a place called Coinbase or Gemini or River or something like that. And you can leave it there. A lot of people who are really hardcore Bitcoin believers don't think that's very wise, because you don't control the Bitcoin and you don't have the private key. And the private key is like it's like key, the key that unlocks how you can trade or sell the coins. So, it sounds like, Stephen, that you know quite a bit about this space. You mentioned a cold wallet, and a cold wallet is sometimes called a hardware wallet. And basically, you're replacing that online exchange where they're holding your Bitcoin, and you have a physical device that holds a private key that you put into your computer, and that allows you to transact with Bitcoin. And I know Bob can explain this probably more efficiently, but you're actually asking, Stephen, some of the things that I've been learning about a lot recently is, some other people in my family hold coins, and we're trying to figure out how to be smart so that if some one person can't lose their information, or one person passes away and it's lost. And so those are really good questions. I would encourage you, maybe, Stephen, to look into services, or maybe research services like multi-signature services, multi-sig. There's a company called Casa, there's a company called Unchained Capital, and they actually have professional services that you might find from like a bank or a Wall Street custodian, to help you manage some of those things, that these challenges you're talking about. Of course, they're going to charge you for it. But if you're getting into the multiple Bitcoin or numbers, it might be worth it if you feel nervous about, how to take care of your Bitcoin. And do you want to add, Bob?
I think you did a good job. It's not a one size fits all, and even for an individual or a company or whatever, it may be multiple things. You may use a combination of cold storage, third party, custodial accounts. As you get bigger, or the complexity of your situation gets more involved, as David said, a multi-sig solution can be very important. This will be one of the more exciting growth areas inside Bitcoin as more and more people on board are presented with this problem. I think there's a massive amount of money for companies to provide these services. You're also seeing that the OCC and the government are starting to lighten up slightly, and also now starting to allow banks to participate in this. So I'm sure over the course of the next few years, you'll see several banks and institutions that maybe you're comfortable with your fiat side allow you to do that. Now, I would say research it thoroughly, because there is a phrase in Bitcoin that says not your keys, not your Bitcoin, meaning if you don't personally hold the private key. I'm pretty close to a maximalist, but I'm probably a little more lax in this one, in that as I said, I don't think one size fits all. I don't think it's practical for everybody to manage all their keys by themselves, and I don't even think it's smart. So Great question though.
Great.
I got to
Thank
run
you.
in just like a second. If there's anything for me, maybe.
No, thank you, Bob. Thanks a
Probably
lot
got
for joining us tonight, and thank you.
Yeah, thank you.
Probably everyone will leave now when you leave.
stop.
All right, take care.
Thanks, guys. Bye-bye.
If I could just piggyback off of that on a quick follow-up on, does any of part of that answer change if you're doing it as an individual or as a business via an LLC? Does any of that approach, in your opinion, or anybody's opinion, change based on how you're buying it?
I'll just add real quick before I go. If you're a business and you have any substantial Bitcoin, then you need to, I highly recommend that you work with a third-party organization. David mentioned a couple pretty good ones. There's all kinds of, there's Anchorage, there's River, there's the big exchanges, Coinbase, Swan, all these sort of things have institutional groups now. And so just, I don't know, I've never heard of a bad one, honestly. So find one of those guys and have them help you if you're now holding corporate treasury in Bitcoin.
Thank you.
Cheers, everybody.
Does anybody else have any other questions they'd like to bring up tonight and talk about? Pretty.
I have a couple of questions that I think will be fairly quick. One is for Andrew, and David, one is for you. Andrew, you had talked about having a third-party hosting of your own rig, and that they were in a couple of different states. Are they in different states because that's like where the electrical power is less expensive, or do you know why they're in different states?
Yes, well, whatever facility they have available when you buy them is where they put them. Now, when they're looking for facilities, they're looking for what's called stranded power. Like here in the Carolinas, there's a lot of textile stuff that was shut down and moved overseas. So it's really great if you can go find an old textile plant that has heavy power in there and you get a real low rate. It's a great place to set up to mine. But it didn't work out for them in the one facility that they had intended to use. So that's why I'm still waiting.
Okay, thank you. And then David, my follow-up question for you is the rigs that you showed the photo of. Can you give me an idea of roughly like how much one of those rigs costs?
Yeah, well, I can tell you, okay, I can tell you how much they cost us in April.
Okay.
And I bet they're probably double to maybe triple today.
Okay.
But I'm not, so those cost about $3,000 each in April.
Okay.
But
And hard to get right now then? Like everybody's buying them, hard to get kind of thing?
well, you can get them, you just, okay, so now, so those are called Bit Fury TARDISes. I've also purchased some, I know these names sound crazy, but I've also purchased some Bitmain manufactured amp miners. And I bought those in July and they were 7,000. And now those are trading on like marketplaces for 13, 14, 15, 16,000.
Okay.
But if
And
you
with the same power?
The same model.
Okay.
But the other thing is like, so if you go to Compass Mining, well, I'm not sure about Compass, but there's places that you can buy these things and get them in your hands soon, but you're gonna have to pay a big premium.
Yeah. Okay. Thank you.
Yep. Anybody else have anything they'd like to talk about tonight, or?
Yeah, David, are you making these names up for these things?
No.
Andy, he's making all this crap up.
No, I know it's believe me. And I know, John, I mean, I really appreciate John for asking the questions because, we're here to challenge each other and share and learn. And, I mean, to be honest, we had one of these meetings in February 2020, and that changed my mindset on all this stuff. And it made me start thinking a different way about, having a digital gold, I ask people, well, do you understand why people for thousands of years have used gold as a store of value? And most people don't, like, there's no reason why. It's like, you can't eat it. You can make pretty things out of it, but there's not a whole lot of utility of it. But for thousands of years, it's been a store of value. And so I say people who are my age or younger are growing up with, and their life is digital. And so why wouldn't there be a digital gold from now and into the future? And I can't guarantee it'll be Bitcoin, but I think it'll be something. And so that's one of my premises for, now Chip asked, why, yeah, you're right. It probably shouldn't guarantee things. Bob probably should say it's impossible. But I can't explain all the technical side of this, but the digital gold is where I come from. Go
Hey,
ahead,
Chip,
Ed.
have you seen the two Bob Burnett presentations on this venue? Okay, very good.
All right. Well, I appreciate you guys for joining us, and hopefully educational. I know we went fast, but my goal tonight was just to, like, I didn't know these options, obviously 6 months ago. And I just wanted to get everybody an idea and if you want to research one or two of those methods, and if you want to, get a hold of me, I'll help you, get further down the path if you'd like. And just thanks a lot for joining us tonight. So bye, everybody.
Thanks, David.
All right, bye-bye.
Yep, thanks, David.
David. Thanks, David.
Thank you.
Thank you.
Thanks, David.
Bye-bye.
David, good job.
You want to stay on?